Joining us for more now is Josh Barker from RiverX. Good to see you, Josh. So big falls coming through on Wall Street overnight. It does seem that President Trump's plan not really going as planned.
No, exactly. I think last night was very telling with Nvidia finally updating the market as to the actual fundamental impacts of these tariffs. $5.5 billion that they're going to have to, I guess, essentially write off with their sales of chips into China. So yeah, I think it's the first big fundamental impact we've seen from these tariffs. Obviously everyone looks to price them in, but it's finally starting to flow through to the actual reports, which has been the bellwether for the market, Nvidia, lately, and it's obviously dragged the market down. And I don't think that we're necessarily at the bottom just yet. I think there's still a little bit more downside to come. The longer this goes on, the worse it is as well.
And we also had Jay Powell making some comments too, saying it's too early to make interest rate policy adjustment, but also warning about the potential impact here, while the retail sales were interesting too, because it means everyone was sort of trying to buy before these tariffs really come into effect. Yeah,
exactly. So I guess the saving grace is that the Fed have room to cut. However, it's not necessarily just a rule of thumb that just because they can cut, they will. They still have to balance the inflationary pressures, which tariffs are inflationary. So it's kind of, it's put them between a rock and a hard place, essentially.
And with that rock and a hard place, I mean, we've seen equity markets lower, but bond yields also not really going where he wants them to go.
No, exactly. So that's probably the biggest concern in the market for me right now that I'm monitoring. Bond yields are essentially at the same level as prior to the tariffs coming in. And funnily enough, the same level prior to him coming into White House. So it's not necessarily gone to plan, especially for him looking to refinance the debt, essentially. There's a few theories, and they are just theories at this stage. Obviously, China unloading, and also Japan, which hold more debt than China. Interestingly enough, we won't find out until the end of the month when that data comes through, but it's not necessarily the Japanese government that have control over those holdings in US debt. It's a lot of the Japanese insurers. So if they view the US as being uncertain and risky, they're simply just going to look at that more of a decision to mitigate risk and simply rotate that into German bonds or other European debt, which is what the movements in the market is showing, but we'll see how that's played out in the actual numbers.
And what about the intention here to establish the sovereign fund that is really not quite going to plan either? Yeah,
exactly. So he's talked a lot when he was campaigning about setting up a sovereign fund for the US. Norway has a $1.8 trillion fund. The Saudis have nearly a $1 trillion fund as well. So maybe the US is not that big to begin with, but it still will be a very large number. And I guess he wouldn't want to kick that off and have immediate losses in that right away. So the equity markets are still going to be pressed down even further while he looks to establish that. Would be, I guess, the theory there too. So it's really interesting to see. Okay, these tariffs are not going to come off anytime soon. There really hasn't been any moves forward for the relationship with China, but also a lot of the other countries. There's still very stringent tariffs on places like Mexico and Canada. So yes, it's been a bit of a reversal or a pause in tariffs for a lot of countries, but tensions have not eased at all. So yeah.
So what does that mean for our market? Because we have such a strange week, given that we have a 4-day long weekend with Easter, a Good Friday and Easter Monday, plus Anzac Day next Friday, end of the month as well. Would you expect quite a lot of people taking risk off the table?
I'd definitely say so. Look, ahead of a long weekend like we're going to have, that negative overnight movement, I think a lot of people will look to take risk off the table heading into what's essentially a lot of public holidays coming up. So I would expect a lot of weakness in the market, probably into the close today as well.
And when you say you don't think we found a bottom and you're speaking more globally, where would you be looking for opportunity here?
Yeah, it's interesting. Like, we've got the Nasdaq down almost 20%. So I think, if that has any further weakness, it's in a bear market. So it's really going to be tough. A lot of the Aussie tech names have followed a similar movement to the Nasdaq. However, fundamentally aren't as impacted. not selling chips to China, so it's a little bit different to Nvidia. But I think they're really good companies, especially software as a service companies, those sort of names. I think there will be opportunities in those as we start to see the markets bottom out, but yeah, a little bit too early to call at this stage.
And still looking at any of the gold players when we see gold hit yet another record. I saw that it hit 25 records so far in 2025.
Yeah, it's on a good run. Like, I think fear and uncertainty and political tensions are probably as high as they're ever going to be right now. So I think there's probably more room left in that rally, but you're getting close to the end, I feel. So it's not something we take on a 12 to 24 month outlook at these levels, but yeah, definitely uncertainty is at a peak, and it can still continue to go higher for sure.